a lot of people seem to like the gambling aspect, like the earnings date. So there's an earnings date, and the question is, what do you do prior to earnings, right as earnings happen? And to me, it's generally a gambling mentality because you don't know what's going to happen. And even if you have good earnings, there could be something else that they say in the discussion at the time, at the earnings report, that makes the stock go down. Also, when stocks go up a lot, they might sell off at the earnings, even if they're good earnings. So it's like called buying the rumor and then selling the news. So buying beforehand, selling when it actually comes out. So even if it is good news and there's nothing really negative, it could sell because everyone's bought prior to that, and then they want to dump it, knowing that other people are going to buy right at that good earnings report. And like I said, even on good earnings, you could have negative aspect to it, a forecast or something mentioned in there. On the other hand, negative news, a negative earnings report could end up being having the stock go up because they said something in the report, in the discussion. So it's really uncertain. So I don't really want to trade. Now you could potentially think about buying, in advance of the earnings report, like 2 weeks, if you see a positive, chart trading, analysis. But that's just my philosophy. So a lot of times, like, you'll see a stock go up a huge amount and you're like, oh, I should have bought. But I don't, you shouldn't try to get into that habit of, seeing a huge spike on an earnings and then sort of question, doubting yourself and stuff. So I just thought I would go through some examples of where you have, so on one thing I want to mention with TC2000, which is a software, you can put the earnings date right here. And you can see here that it says August 5th, which is today. So a lot of times you're not aware of the earnings, and you could get burned because all of a sudden something happens. And so if you want to get a free trial or even $25 off purchasing this program, check out the link in the description below. I've got this program myself. I've used it for a long time. I love it. And I've talked about, I have a bunch of videos that go through like some of the features and some of the stuff that I use. So here I have these watch lists. So there's some uptrends stocks, and what you can do with an uptrending stock is you can look for opportunities to get in after like a pullback here and here. Like, so I put an arrow, say here, you're still in an uptrend and you have this pullback and there's a chance to get in. I've talked about, entry points, I think, in other videos, but so I have different watch lists here. So that's a nice feature. Like you see the so every time you open up a chart, you'll see whatever the earnings date is, so you'll know that it's coming. And so, you might want to think, well, I should get here because earnings is the next day, but you don't know what's going to happen. There's another one that came out with good earnings, say August 5th as well. So you have this big spike. So I guess in general, my advice is to not be holding stocks, for trading purposes when you get to earnings date. So you do miss these jumps, but there's also the opposite that can happen. So yeah, it's a nice feature. I knew that a lot of earnings was coming late July, early August. So you're not sure after a full quarter of bad bad economic situations, you don't necessarily want to be holding. But this is a tech watch list, so a lot of them have done pretty well with the cloud-based stuff and people shopping online and stuff like that. Let's see. So here's some negative examples. The earnings was So when the earnings goes into the future, you can back it up 3 months. So this is, basically somewhere right around now. So, because it's been pushed 3 months into the future for the next one. But, this graph looked amazing. Look at this uptrend here. And then just boom, right? And this is a gap. So that means that it actually gapped down prior to the market opening on the news. So the news, a lot of times the earnings comes out in the morning or after hours, and you can wake up and be down. Like even if you didn't hold it, like as soon as the morning started. Let's just see here, draw a line. So another feature with TC2000, you draw a line from price to price, 26%. So even if you sold it like the first thing it opened, you're down 26% overnight on a stock. So you can get burned a lot. So you don't know what's going to happen. Lumber's been doing amazing. Here's another one that I have in a uptrending watch list, because this thing was just going up and up and up, and you can see here that there's a gap down and then quite a big drop. So that's 15%. And this one was doing amazing. Like there was days when this guy was up, see 20%, and then you have these smaller days, 7-8%. And so that's another one. So, here's one that's August 11th. So that's in 6 days. There is a chance you could buy and then get out prior to the earnings if the chart looks like something you should be in. But I just don't want to get involved in those situations, because it can go up 20-30% or down the same. So let's see, here's one that went up 13%. So earnings dates today. So there's a lot of earnings coming out August 11th. So I guess I just wanted to demonstrate through some of these downwards and upwards that it's unless you have some sort of inside information or something, and you really know what's going to happen, but or you think cloud's been really great, so there should be huge huge profits or something, but it's a bit of a crapshoot. So it's up to you obviously to make your decision, but the point of my video is just to show you that sometimes it goes up, sometimes it goes down quite a bit overnight, right on the earnings date. So it's generally a risky proposition, and I would advise that you trade kind of in normal situations after the earnings, and you want to see what happens after the earnings, because sometimes you don't get an immediate reaction, but you want to trade based on the stuff that I've talked about before. Uptrends, nice stocks above the candles or above the ADMA, and there's a lot of other things you can look at, but just avoiding earnings would probably be a good idea. But if you have different opinions, feel free to do whatever makes sense for you. But just thought I'd show you some examples where sometimes they go up, sometimes they go down, and you can try to trade in between those earnings periods. The other thing you can do is buy ETFs. So if you look at any ETF, like ARK is one that's a bunch of innovation. You're not going to have an earnings date for this because there's a lot of companies in there. So another nice feature of TC2000 I've mentioned before is this open component watch list. So when you have an ETF, for a lot of them, they have a bunch of stocks in there, obviously, and you can look at the ones that are in those, and you might decide you want to buy the individual stock. But if we just sort this by percent change, I'm going to go upside down. LC, looks like that one had an earnings. This one had earnings today. Not too bad though in terms of the negative ones. So it's a nice feature of TC2000 as well to see the stocks that are inside the ETF. But that, you can buy, like Jets is the airlines, and then if you click on the component watch list here, then you can see, obviously Delta, American, and these are in October, so there's no earnings imminent at this point. So for any individual stock, a lot of these are in October. So you might still have an effect in terms of the overall sector because they have relatively similar earnings dates. But it's nice to see the stocks, and then you might find that there's ones that you don't necessarily want to buy. They just look bad, so you might decide that you're gonna buy stocks that within the ETF themselves, but not ones that are that aren't doing so great. Because sometimes an ETF has good, obviously good companies and bad ones. So, but like I said, the earnings is important for trading and stuff like that. Obviously, if you're holding longer term, then you're not going to worry. There's going to be some ups and downs and stuff. But all right, guys, we'll talk to you later.